Today we're going to be talking about how the system is designed for most of you to lose. I'm going to be talking about the actual way that money works in our society, the way that banking works, and how it's essentially a rigged game that lets the rich take wild bets, engage in rampant speculation, and if those bets don't pay off, well, it's usually you or the average working person that pays the price. Not the billionaires and not the financiers, and especially not the ones that were engaged in the most reckless of practices. We've seen it happen in the 2008 financial crisis. We're seeing it happen right now. Before we dive into these reckless practices, which some of you may or may not know about already, we need to explore a concept called the Cantillon Effect. The Cantillon Effect explains how new money comes into the system when it is freshly printed. This is especially relevant with fiat currencies that are not backed by anything physical or hard. The Cantillon Effect was described like honey. When you pour honey into a cup, it doesn't spread out evenly, but it gathers around the middle and then eventually works its way out to the edges. This is sort of how new money enters the system. When new money enters the system, we see that it typically goes to the people closest to the money. With the recent stimulus, the trillions of dollars that we've been printing, we saw the $1,200 check that everyone was talking about, yet I personally don't even know anyone who has received it yet. If you have received your $1,200 check, do me a favor and comment in the comments section below. I'm very curious to know who has and hasn't received this stimulus check. But beyond that, there was a variety of small business stimulus plans that didn't end up going to the small businesses, the actual entities that would definitely be in jeopardy if they didn't receive stimulus, given the unprecedented nature of this downturn in the economy. Instead, what we saw was stimulus making its way to entities like Harvard. Harvard is probably one of the richest entities in the entire country, and yet it received millions of dollars in stimulus. This is a great example, but not the only example by any means, of the way that the money has made its way to those closest to the money and almost exclusively those closest to the money. We also saw noteworthy banks like JP Morgan and Bank of America only giving out the loans for the PPP, the Paycheck Protection Program, to those who already had a business relationship with their bank and more specifically, already had existing lines of credit or debt that they owed to the bank. So essentially, what those big banks did was take this stimulus and use it to lower their risk, lower their outstanding debt, so they could essentially decrease their exposure. But you see here the difference between the idea for stimulus and the reality of stimulus. Now, when you print money, it effectively devalues all other money in existence by a certain percentage. And if all of that new money goes to people who are already wealthy and in power, then essentially what the new money printing does, it effectively transfers wealth from the poorest to the richest. It effectively transfers wealth from those furthest to the money to those closest to the money. And we've essentially seen this in the stock market with explosive rising prices in stocks just because of this limitless policy of government stimulus. Yet, that stimulus has not made its way to the mom and pop shops. There are tons of people who don't know how they're going to make it through potentially another month, or if we need to re-quarantine because of a second wave of the virus. There are people who don't have backup plans, who don't have a security blanket. And yet we're seeing 97 cents out of every dollar of stimulus making its way to the billionaires and financier class who are responsible for creating the financial imbalances that led to this downturn. To understand just how predatory some of these banking practices are that have led to situations like the dot-com crash and, most critically, the 2008 financial crisis, we must understand the deregulation that has happened since someone named Larry Summers came into power under Bill Clinton. Now, Larry Summers is an economist, and he served under Bill Clinton as well as Barack Obama. Most notably, he was famous for repealing significant parts of the GlassSteagall Act. The GlassSteagall Act was put in place in 1932 after the Great Depression, when they looked back and realized that investment banks that were actively trying to make profits and commercial banks that were supposed to be storing your money safely should be separate entities, and that the type of bank that looks after your life savings should have limits on the types of speculation that it can engage in. Now, in the 90s, that was repealed, and it essentially opened the floodgates for banks to engage in wildly speculative and wildly risky practices that effectively allowed for the banks storing your money to potentially go under because they've bet in a too risky way and they've leveraged themselves too highly that they've opened up the possibility that they might lose all of your money. That's something that we agreed as a society shouldn't be the case. But what we saw in 2008 was that the banks had gone way too far. Beyond the separation between the types of banks, there was also the Commodities Futures Modernization Act. The Commodities Futures Modernization Act was passed in 2000, and what it essentially did was limited significantly the jurisdiction of the CFTC, which normally regulates commodities, and the SEC, so that they eliminated overlapping jurisdictions. What all that means is essentially they gave the banks more leeway to engage in more speculative gambling over certain types of assets that didn't exist before. And what happened? Just a few years later, we got the 2008 financial crisis because essentially the banks were given full reign to package up debt and sell it. The banks were issuing mortgages. Instead of just reaping the reward of the interest from their loans, they were packaging up that debt and selling it as a derivative product. That new package of debt then circulated, and everyone assumed that the mortgages were good and that people would pay them back. But the banks were underwriting bad loans because it allowed them to package up more and more and more debt. So what we had was essentially the sheriff was no longer in town, and you had the bankers, which turned out to be the bank robbers, running wild, packaging up wild products that never should have existed and selling them to people who believed that these products were as good as those in the past. But because the regulatory oversight wasn't there anymore, essentially the bankers went wild and most of these banks needed to be either bailed out or they would go under. And that's what we saw in 2008. And both of these pieces of legislation came from Larry Summers. The reason why this is critical and important to understand is that Joe Biden's campaign just announced that he's bringing Larry Summers on to help oversee the recovery, the economic recovery going forward. And why that's problematic is, on one hand, we're seeing the Trump stimulus with 97 cents out of every dollar going to essentially the billionaire and financier class. And then you have Larry Summers coming in to oversee the Democratic side. Larry Summers is essentially the architect of these modern, deregulated financial war zones that have led to these financial collapses. What we have is a battle right now between two horrific financial policies, monetary policies that leave behind the everyday worker. And essentially, what we need is a new monetary policy. Thankfully for everyone, that already exists in the form of Bitcoin. Bitcoin is, in effect, a new monetary policy. It's a money that cannot be debased, and it's an asset that no one can take from you, and that you can never show up one day and have a banker say, actually, we were engaged in too risky of trading practices, and so your life savings is gone. Within the Bitcoin system, this could never happen. And that's why Bitcoin is more than just this new asset class. Bitcoin is more than an alternative or some digital money. This is an entire new monetary policy. This is a new system. And it's a system that can help repair some of the grievous and unethical changes to our own economic system that has left behind workers and essentially allowed for the richest and most powerful bankers to engage in wild speculation, essentially gambling. And when those bets don't pay off, they look to the government for bailouts, and they essentially debase the currency, stealing from the poorest and transferring wealth from the have-nots to the haves. Bitcoin is the solution to this, and it offers a way to help make amends for some of the sins of our past. And for that reason, Bitcoin is an absolute necessity for our economy going forward. We need a hard asset. We need a hard asset that can serve as both a store of wealth as well as a medium of exchange. And I know a lot of people say Bitcoin is actually too slow to scale. It can't serve as a medium of exchange. It can't be real money yet. Well, I beg to differ, because you can now spend Bitcoin with a credit card, and I do it all the time. I have a Crypto.com card, and I absolutely love it, and it lets me spend Bitcoin wherever Visa is accepted. Crypto.com is one of the best companies, I think, in the entire crypto space. They're actually a partner of this channel, and I'll be helping promote Crypto.com over the next few months because I truly believe in their message. I believe in their mission to bring crypto to the point where it can be transmitted just like every other type of currency. And in our modern society, that means a credit card. So the ability to spend anywhere that Visa is accepted, I think completely wipes out the argument that you can't spend Bitcoin easily enough. If you guys don't have a Crypto.com card, I highly suggest you get signed up. They have awesome perks as well. They pay for your Netflix and Spotify, as well as you get 100% back on Amazon Prime purchase of your membership. As well, you also get 10% back on Expedia bookings. Their cashback programs are crazy, and in their highest tier of card, you get 5% cashback on all purchases, which as far as I know is a market leader. I don't know of another credit card with that high of cashback on every single purchase. Crypto.com is actually doing a half off Bitcoin sale. That's right, your eyes do not deceive you. This is a half off Bitcoin sale on May 12th. So you need to sign up to get access to this. They're allocating $1 million in Bitcoin, and you can literally buy Bitcoin at half of whatever the price is that day. I mean, come on, that is absolutely crazy. They're calling it a halving special. This is not a drill. This is the real deal. Go sign up for Crypto.com right now. Please use the link in my description. It's a referral link and it helps the channel. I really appreciate it. As I said before, this is one of the leaders in the entire crypto movement. And by using crypto and using Bitcoin like money, we are essentially opting out of a financial policy, of a monetary policy that has consistently shown that it doesn't have the interests of the average worker, the average citizen in mind. You have essentially a criminal level speculative gambling operation happening at these big banks. And whenever anything goes awry, they look to the government for a bailout, which effectively robs the rest of the population of the value of their money. This is, by any way you paint it, wrong. It's unethical. It shouldn't be legal. Instead of going out and protesting, I've seen people vandalize banks. That doesn't accomplish anything. If you want to protest against this monetary policy, all you have to do is go and buy Bitcoin. That's all you have to do. Anyways, this video, as you can see, is not about the price of Bitcoin. It's not about future gains from Bitcoin. It's about a monetary policy that is sound. It's based on code and math, and it cannot be debased by greedy people when they get into bad situations, which is, of course, what's going on right now in our economy. I hope you enjoyed this episode. I hope you learned from it. I hope you know a little bit more about our banking history and the events that brought us to where we are in the current state of our global economy. And I hope this makes you a little bit more aware as to the ways that Bitcoin is changing the world, not just by making a few people rich, by buying low and essentially getting this explosive growth, but it's actually allowing us to evolve past a legacy system that has proven time and time again to be tremendously flawed. Please leave me a like or a comment in the comment section below and let me know what you thought about the video, and let's continue the conversation down there. If you're not already subscribed to FUD TV, do me a favor and hit that sub button. Thank you guys for watching, and I hope to see you very soon on the next episode.